Good morning and welcome to today's pre-market video. Now in today's pre-market video, we'll take a look at the Nifty Index. I'll take a look at what option buyers can do with it and what option sellers can do with it in this expiry. Before that, a quick look at the news. Now on the news front, on the local front, there's only one news which is really significant, which is the new RBI governor gave a speech yesterday that he wants stability to continue and the RBI legacy and the use of technology and everything. It was basically generic speech, and now it will be important to see whether he puts his words into actions or does not. Then on the international front, as when I'm recording this video the night before, the American market, Nasdaq, is doing well, for example, but it's doing well as their numbers have all come in line with expectations. There's been no surprise in the numbers which have come out today, and so that is why they're doing well. Now coming to our local boy Nifty, let's take a look at what option buyers can do with it, plus option sellers can do with it. Now the Nifty Index has been in a range for quite some time. This is from, if we take a look at it, from 5th of December, we have been trading in this range, and now it's 12th December. I had said that time that we will basically be encompassing in this candle's range, as there was a good rejection on the upside and a good rejection on the downside. And I said it actually in Friday's video on the Sensex, because basically all the indexes had formed similar patterns. And now, according to me, that is one of the reasons that we have managed to stretch it out this long in this tiny range. Another reason which I believe is there is that now there is only two expiries left, Nifty and Sensex. Before there would be on Monday, Tuesday, every day there was an expiry. So that was creating a lot of volatility, as basically everybody would come in to actively trade on each day to trade because of expiries. But now that has ended, and that drop in volume has caused us to go sideways. Number two is the higher margins. The higher margins, I would say, primarily they've hit option buyers, but primarily have hit option sellers, and that will naturally take a toll on the volumes of the market, which will again cause sideways. In fact, it will be interesting to see what happens from January, as that's when the lot sizes will increase. And once the lot sizes will increase, that is what will literally put a spear through the option buyers, the small option buyers, as okay, the guys who are trading huge lots, they don't get affected. They already got hit by the margin, but that rule will not hit them. But the guys who are trading, let's say, a few lots, they will get smashed in January by that law, and it will be interesting to see how the market reacts to that. Now, all said and done, yes, we are in a range, and in fact this is one of the weeks when I have not had to update the levels I gave clients last week. This is, I had given them a these resistance levels and these support levels, and the Nifty has stayed between the 24,680 and 24,640 and 24,780 resistance completely throughout. Now, so my option buying plan is pretty clear. Today, due to expiry, one side is going to pop. Naturally, we're in a box range, a very tight box range. So when one side pops, we're going to get a good move to that side. So it's a 50-50 kind of trade. You're not going to have a clear direction into what you should do. Now, how I'll be playing it as an option buy, if it breaks 24,780, then I'll do a quick long to 24,900 and then 24,980. If it breaks that, then 25,060. Now, why haven't I gone above 25,060 and put a resistance as 25,200 is also a strong resistance? This is as we'll be coming and testing basically a bit above this week. And this has shown its strength over from 5th December to 12th December. So I think any up move can maximum go 24,980 and 25,060, after which it will have to taper off. On the other hand, if you break 24,640, we can have a good fall to 24,550. If you break that, 24,380 to 24,420, very important support. This is as if you break that support, we are going back into the bearish run. Right now we're in a neutral territory. We're neither bullish nor bearish, but we break that support and we go to 24,250, we have entered the bearish run. Basically, the indexes will have entered the lion's mouth. It's now only time for it to be bitten. So that's my option buying trading plan. It's a 50-50 day. What's my option selling trading plan? Now, I had even shared on the previous videos and even on Twitter that I basically, me and clients had sold Nifty CE cells in the money, but now the past 2 days, basically Tuesday's trade session and then Wednesday's trade session, booked about 70% of the position out and taken profits. This year we had sold the CE cells when they were very expensive, so a good profit was made via option selling. Why also I did that is, due to today being Nifty Expiry, I expect basically option sellers will end up getting tested a bit because we have not had any move from 5th December. So we've taken most of the profit off the table. The little position left is with a tight profit stop. So any move against us will be cashed out. I'm pretty sure within the first hour of trading itself, either I will cash out or the profit stop will cash us out. I'm pretty sure of that. Now, how will I do intraday option selling? Now, intraday option selling is something today basically of, if you're going to play aggressive, then I would say you sell calls above 24,900 and puts below 24,550. If you want to play cautious, then calls above 24,980 and puts below 24,420. But due to it being a 50-50 kind of day, unless it stays within this bigger box range of 24,900 to 24,550, then both calls and puts will end up expiring to zero. On the other hand, if it chooses to break one of these sides, then one of the sides of option selling will get cashed out. So once you do, let's say once I have sold the options in the morning, I will keep a tight stop on them, initially at cost, and then as it goes into profit, because it's expiry day, option sales will go into profit quicker. I'll put a profit stop so as not to lose the intraday gains. This is as when one side pops out, let that side get cashed out, and then you can ride out the other side to zero. Then towards the end of the day, what I will be doing, because this I'm going to start entering in the morning, towards the end of the day, if let's say we have popped out to the upside, then I will sell above the resistance level which is stopping us, which is most likely going to be 24,980 or 25,060. If we have broken to the downside, then I'll sell below the support level which has held us. That will most likely be 24,420 or 24,550. So one of these two. So basically morning sell both calls and puts equally. One side I expect to get stopped out by the profit stop. The other side will ride on. Then once it is ridden on and it has reached the key levels which I've shared, when the volume indicator, for example, is showing that there is a loss of strength now at this level, whether it's on the upside or downside, I will sell calls or puts depending on the direction and also capture that. So that's my trading plan for the Nifty expiry. If you have any questions, you can drop them in the comment section below. Also, if you have any stocks that you think are interesting to analyze or you're stuck in, do share them in the comment section below, and if there is something worthwhile discussing, it will be covered in one of the upcoming videos. Thank you.